Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday. It's March 2nd. A little quieter day today. Really, basically the only quiet day for the week. So today we only have the weekly jobless claims. So last week we had 244,000 people apply for unemployment. This forecast for this week is supposed to be within that range at 245, and it came in surprisingly at 223,000 people applying for unemployment. These are levels that, again, we haven't seen since the 1970s, which is obviously very good in terms of people applying for unemployment. So this is good news right here. So let's go ahead and take a look here at headline news. Stock market is down, so even though we got good news in the weekly jobless claims, they're taking a bit of a breather. You know, the Dow was up 300 yesterday. We had some great market movements yesterday. Even Snapchat, underneath Snap, came to open their IPO, which appears to be successful so far today. But that's not on the major indexes like Dow, Nasdaq. That one's coming in on the New York Stock Exchange, so that's why you're not seeing the Dow, S&P, as well as Nasdaq being as affected, especially Nasdaq being that they're typically the technology type of index right there. But right now it's taking a bit of a breather. They're kind of cashing in right now. The valuations are a bit high, especially a lot of optimism coming in. The Fed's basically are stating that the economy's in the right footing. Things are moving up. Trump's speech came in, even though we haven't seen any details in his plans, and obviously all of them haven't been implemented yet, and haven't seen any effects of it yet. People are still high on that. So because of that, they're kind of a lot of investors are concerned that maybe they are a little too high, or are they priced in the right position? Because again, we haven't seen the effects of the plans yet. So they don't know the true value as of yet. So they're kind of having probably second thoughts. So right now they're cashing in a little bit on the stock market. As a result, bond market, as you can see here, is down. We're down about 22 basis points. This is a bit of a concern because we are now touching the second layer of the floor, and we haven't really been down this way. We've touched it a few times and bounced back, but we really need to make sure we close above this level here as much as possible, so that way we can, otherwise if we close below it, it could potentially be another drop further down. This will give us a little bit of support, hopefully bounce back up and keep within this range here. So this is something I definitely want to keep an eye on to see if we can get ourselves back late, at least hopefully late in the day, or worst case by tomorrow, hopefully start above it, because we don't want this downward trend to continue. With the downward trend, that means higher rates. So today rates are higher as a result of where we stand. The yields are increasing quite a bit here. They're approaching 250 again. We want to make sure if they reach the 260 level, that's kind of a psychological level, we could see another drop here, which would be more higher interest rates in long term. So just be cautious here going out there. Now, something to touch on with the Fed rate hikes, which now looks like there's going to be almost more definitive that we might have a rate hike, an expected one now in March here, another 2 weeks. Typically, that actually helps the long-term rates because it fights inflation, and that is what is the enemy for bonds, which is mortgage-backed securities, that it erodes the value over time. So this is a different story, whereas we've been for basically a decade now, we've been just in this level here where there's no growth, they're just barely hanging on there. There's barely a pulse here. Now they're seeing some light at the end of the tunnel where we could see some huge growth coming up here, and people are excited about that, and that's where things are at. And as a result, regardless of if there's a rate hike or not, basically the rate hike to them, it means that the economy is going great, and they have to keep up with it. And this is what's translating today versus whereas if they're doing a rate hike, it's just to stave off inflation. So this is a different sentiment towards rate hikes that we're seeing now. So anyways, again, rates went up a little bit today compared to yesterday, and then tomorrow we got some more news we'll go over. But thanks for watching. We'll see you guys tomorrow, and if you guys want more updates throughout the day, just stop over Twitter. You can find me underneath Mike Bjork, and where I post throughout the day updates. All right, have a wonderful day. Thanks so much for watching. See you tomorrow. Bye-bye.